Hello everyone, I'm Taha, financial market analyst with zForex, and this is our weekly analysis. Welcome abroad.
Hello again, this is Muhammad Taha Bukhari, and this is a new week. This is from 17 July to 21 weekly market analysis. We will start with the XY, the dollar index. This week, last week, we had really sell-off 6 days of complete continue with sell-off. We had 6 candles, which was a harsh sell-off on the dollar. After we got better than expected inflation slowdown in USA from CPI, PPI, and from the core, from the head. So this was so much good pricing how much Federal Reserve can hike for the next meetings. For 26 July, the market is pricing by 96% probability of hike. So the market is pricing hike in next meeting in 26 July. So rather than that, they are market thinking that is the last hike, as we can see on the market, they are pricing like 30.5% of possible more hike, second hike. This is clear on the price on the XY and the dollar. The level that we reached, it's a level we didn't solve from 22 April. So it's around 99.7. It's a lower level. Right now, technically, we may have found some support around this level, historical level, and we are waiting for a comeback toward the last support that will become resistant. It's also a point of the median level where we have right now on the 4-hour a clear bearish channel. We touched this our parallel of the bearish channel, and we are going toward the 100.1 level. If we came back on the euro on the XY, you can see also this on the euro dollar. Also is the concentration of price. It may indicate that there is a possibility of a correction going back toward the 1.115 as a support level, and maybe more, but 1.115 could be the most correct level that we may face for a possible correction. Especially this week, we'll wait on the dollar side for retail sales data. We are waiting for also data that may show us that there is also a slowdown. We saw CPI, we saw PPI. So this was positive for sentiment that inflation is slowed down. Federal Reserve is winning on inflation. That may give some confidence and some credibility to the Federal Reserve after they failed before to catch on the right time inflation when it was going up and up after the pandemic and after the quantitative easing. So right now we are in a interest rate that is beyond the 5%. We are going to want to go beyond 5%. Maybe the peak would be 5.25. Stopping there, waiting some time until next year. We may start cutting. But the idea here is today, this week, we may see a retail sales that is slowing down. Also, we have data from the housing market. We have data concerning the building permits, concerning housing start, how the existing home sales. We saw from numbers before that the housing market is still giving higher numbers, giving us the more demand. There is the balance between supply and demand didn't stabilize yet. There is more demand than supply, but we saw some deterioration a little bit on mortgage demand for the last week. We will see how the numbers will be, and we'll see if the economy is really slowing down consecutively, because many members last week they gave some comments. They said, okay, welcome for this. We are welcoming. It's good that we have a significant slowdown in inflation, but in the same time we want more slowdown. We want something that is consecutive, like 2-3 months of slowdown. So right now, for example, in the USA, 3%, or that is important too. We are at 3.55. So there is this slowdown. Members of the Federal Reserve, they want more. They are in the 2%. Is it realistic or not? We will see. If it will be breaking the economy, entering a recession, we don't know. Probability is still low. But this week we have something important. That is the start of the Q2 earnings for the US companies. This data will make things clear about the projection, about the future, especially from big companies, technology, and other industries. That companies that represent in the Nasdaq and S&P 500, the Dow Jones, and this will give us an idea about the projections in the future and the possibility of a soft landing or hard landing. Right now, we are still believing that the soft landing. The market is so much bullish on in terms of indices and stock market. The yields was huge. There was a slowdown on the yields. We will not say that it was, for example, on the 10-year, we went from 4% to 3.8. It's not that significant slowdown. For the US 2-year, similar, from 5%, we are at 4.75%. We may see more slowdown if we got more data that Federal Reserve won on inflation. Okay, this is for the USA. For the euro, we have also inflation level for June that we are waiting for it to slow down. Especially we are waiting something from the core. I don't believe that the core will slow that much as we have the last week. So the core inflation from Germany didn't slow down that much. It was sticking at its level. The head, yes, there is some slowdown in inflation, but the core still sticky. We'll see if this will happen. If we see if the ECB and its higher hikes get enough impact on the economy. That's for the for the European Union. Also, producer prices will give us an idea about slowdown in inflation. That's for the euro dollar. When it comes to the pound dollar, the pound and the BOE, they are really facing a big problem with inflation. Wages are high, even if unemployment gets a little bit high, and in wages, the most important thing that is affecting really inflation right now is going up. It's continuing, is high. So we see even the core inflation in the United Kingdom is not the best right now. It's around 7.1%, the historical level that no one wanted to see, but it is. So the Bank of England is waiting for hikes that can be beyond 6%. We'll see how this will affect the economy, but there is a big probability this will have a real impact. For this week, the data coming from UK is like European Union. Some inflation data coming from for June. We said that the wages, they were higher than expected. So we will see the CPI, and we also projecting how much will be the hike for the next meeting. Will be 50 basis points, 0.5%. It may be. This is for the pound, for the UK. For the pound dollar, technically, we can see that we are like the euro dollar. We went beyond the $1.30 level, and this opened the door for the next level around 1.32. On the short term, on the 4-hour, we have a chart that we have a bullish channel for its third point here around, find some resistance around 1.30, 1.5. We may see a correction going back to 1.3 that I'm sure it will play. It played for sure for many time. 1, 2, 3 resistance. It may become a new support. Sorry, it played 1, 2, 3, yes, and may play a new support as it played before support. So this level that there was, where we are right now, we see that the pound dollar we may have more after the correction. We may see pound dollar making new higher highs toward the 1.32. For dollar Japan, we are seeing a significant sell-off on the dollar Japan, coming from 1.45, the level where the Bank of Japan was signaling that it may be as soon as possible in the market. We saw this from the president of the Bank of Japan, from Minister of Finance, from many responsibles in the government. So yes, we went at 1.38. We haven't touched the 1.37.3. And right now we have a concentration of price. We may have even possible correction toward 100.40.5 on the dollar Japan, as the case of correction, as you all know in the majors. There was a huge fall. We saw this in the DXY. So a possible correction, it's more probable. Gold, this was so much positive for gold. Get out. You can see on the daily, after touching the 1,900 that played as a support, we are coming back. As dollar is slowing down, as dollar is going back. We touched the $163. We entered the price concentration. We may go back toward the 1940, 1940 as a correction toward this level before coming back up if dollar continue down, if data continue to signal in slowdown in inflation. But there is something that's important, is the recession probabilities. Right now, the recession probabilities with those higher interest rate levels, with those tightening cycle that seems it will continue. Even the Federal Reserve, even if it stopped at 5.25, they want to hold more. So holding more impact on the economy, soft landing, no one knows. But the probability of recession right now, it's slow, but also it's still here, it's still with us, and we don't know the impact or how the impact will be. This is what we have for this week. For there is always oil. It was that oil get out from this channel that it was for like 3 months, resistance from 74.3 to support around 67.3. We went out, we get it up into 77.2. correction, maybe the last resistance will be a new support to continue up. All this while right now it is projection that demand is still high, even in China, that today surprised, not surprised, but GDP that was last time every quarter it's went up from 4.3% right now 6.3%, from 4.5 to 6.3. The project forecast was 7.3. To China will be able to finish the year around the 5% GDP projection that right now China is fixing. Is it realistic? We will see, as everyone right now optimistic about performance of Chinese economy. Also, this is what matters for oil as demand is going up. Also, Saudis and Russians that they may cut 500 they may projected that they may 100 million barrels a day. So this is pushing more, the tightening the supply, that's helping the price going up. Also, this week we have some problems with Libya, where we saw halt of one of the most important oil production in Libya. So this is giving more boost to oil. For us, going back to this level to 74.3, coming back to 77, beyond 77, we may say it's 79. We have 81.3 to the 82.6. That will depend on the economic performance and what we will see in development from on the OPEC plus itself. So this is what we have this week. I wish you a beautiful week, trading week, and see you the next week. Thank you.